company is also Aarti Industries, and we've got Suyog Kotecha, the CEO and ED, joining in on the show right now to talk about their earnings. Suyog, hi, morning, great to have you.
Good morning.
Quite a sharp sequential jump, what one can see in your profitability. How sustainable do these margins look? Because you've reiterated your 3-year EBITDA guidance, that of 1,800 to 2,200 crore rupees. What's the indication that you'll manage to match up or perhaps even beat this guidance?
No, I think we exactly continue to follow the same strategy that we've been talking for the last few quarters. I think focusing on optimizing both variable fixed costs, ramping up volumes to get the operating leverage out of existing assets, and then monetizing ongoing capex. And I think that's what is reflected in the numbers. I think this quarter was definitely supported by some of the end markets pushing up the demand, especially in the energy market. We saw record MMA volumes driven by supportive gasoline naphtha differentials, and few bulk parcels which got shifted from Q1 to Q2 also enabled it. But fundamentally, I think the volume ramp-up strategy is working, though margin pressure remains across the product portfolio. But from a volume ramp-up story point of view, we feel we should be able to maintain the story.
Okay, and Suyog, also talk to us about your margin guidance. What kind of top line and bottom line levels are you envisioning to reach that EBITDA margin guidance that you've just shared?
So I think, as I said, margin recovery is potentially 2-3 years away. I think the 3-year guidance is a very broad range of 1,800 to 2,200. I think at a very high level, it's safe to say that the lower end of that guidance is potentially reflecting the current level of margins, versus the upside range of that guidance is linked to potentially margin recovery in the end markets. That's how at least we are visualizing it. Something which is completely in our control, is what we are trying to execute to ensure at least we reach the lower end range of that guidance.
Specifically, I want to talk about Zone 4 project, the new MPP, which you've highlighted are very key to your FY 27 and 28 growth plan. Tell me, how is it that they will sort of, fit in with your strategy? If you could share the commissioning timelines and expected revenue contribution from these assets.
Yeah. So the gradual commissioning of Zone 4 has already started. I think in this quarter, we will start calcium chloride unit. I think in the next quarter, we are planning to commission multipurpose plant. And then subsequently throughout the next financial year, blocks will get commissioned potentially every quarter. I think in addition to that, what we are trying to do is, given the flexibility of that asset, now we are amping up our sort of R&D and innovation engine to come up with new products, right, which we can manufacture in the same asset. One such announcement we announced in PEDA, which is ag intermediate, currently imported mostly in the country, where there's a strong domestic demand. So we'll be commissioning that product capacity in our multipurpose plant in Q4 and ramp that up over the course of next 12 months. And you will see more and more sort of R&D innovation-led pipeline commissioning out of Zone 4 over the course of next 4 to 5 quarters.
Okay, and so you're with the debottlenecking of the MMA capacity of 300 KTPA underway. What's the expected cost over there and EBITDA contribution once this is fully operational?
So it's a debottlenecking of the existing assets. So it's not a significant greenfield investment as such. We are planning to commission it around sort of Q1 of next year, calendar year. What we observe is, given the volatility in the oil and gas market, there are seasons or quarters where, when the blending economics is supportive, we see sudden sort of ramp up in demand. So to meet that kind of demand, I think we need to have some amount of surplus capacity. Last quarter, for example, we had 90% plus utilization levels of our capacity. So in that context, we've decided to go ahead and debottleneck it. We expect to have that capacity up and running in the subsequent quarter.
Okay, Suyog, sounds good, and congratulations on the quarter. It's been a good set of numbers coming in, and yes, margin recovery is something that we are going to be watching out for very closely. But thanks for your time today.
Thank you.